Hey everyone, welcome back to Corporate Decoder, the place where we decode the news that moves your money. And today we're looking at a filing that is all about raising more money, but on a bigger scale. Today on the Decoder, we're diving into Hyperion DeFi Incorporated's latest report, and it looks like they've decided to supercharge their fundraising efforts. We'll break down exactly what this means for the company and its investors. Before we dive in, if you love getting straight answers from these official documents, make sure you hit that subscribe button. And for more exclusive content and discussions, join our Discord community, linked in the description below. So what we have here is a Form 8K filing. Think of this as those big announcements that companies have to make to the public when something really important happens. And for Hyperion DeFi Incorporated, the big news is an update to their sales agreement. Essentially, they've entered into an amendment, which is like a change or an addition to an existing contract called the Amended and Restated Sales Agreement. This agreement is with a company called Chardon Capital Markets, LLC. Now, the key thing here is what this amendment does. It boosts the total amount of money they can raise through their AT, the Market Offering Program. That is right, they've doubled their fundraising capacity from $50 million to $100 million. This program allows them to sell their stock directly to the public over time, as market conditions are favorable. It's like having a standing offer to sell slices of the company pie, but they've just made the pie a lot bigger they can sell. Looking at their progress so far under the original agreement, as of the 24th of September, they had already sold over 4.1 million shares, bringing in about $29 million after fees. So they've used up a good chunk of the original $50 million and are now looking to tap into a much larger pool of potential capital. This is a significant move, signaling a need or a desire for more funds to fuel their growth or operations. The filing also confirms that their shares are traded on the Nasdaq stock market under the ticker symbol HYPD. This means they qualify as a public company, and these filings are standard practice for staying compliant. Now, you might be wondering why they need so much money. While this specific filing doesn't detail their exact plans for the proceeds, increasing funding capacity usually means they're looking to expand, invest in new projects, or perhaps cover increasing operational costs. For a company in the DeFi or decentralized finance space, this could mean investing in new technology, acquiring other businesses, or scaling up their existing platforms. It is a signal of ambition, but also an indication that they believe they have opportunities worth funding. The report also includes legal opinions from Covington Burling, which is standard for these types of filings, ensuring everything is above board legally. So, what's the big picture here? Hyperion DeFi Incorporated is clearly signaling a strong intention to grow and potentially requires significant capital to do so. Doubling their at-the-market offering means they're feeling confident about their prospects and their ability to sell more shares to the public. Now, for my take on this, Hyperion DeFi Inc. is doubling its fundraising potential. This is a strong signal of intent to grow and perhaps a sign they see significant opportunities ahead. On the positive side, it shows the company is proactive in securing capital, which can be crucial for navigating the fast-paced world of decentralized finance. They are essentially telling the market they are ready to scale, and they've secured the runway to do it. However, it is important to remember that raising capital by selling more shares can also dilute the ownership stake of existing shareholders. So, while the company gets the money it needs, each existing share represents a slightly smaller piece of the pie. The success of this strategy will hinge on how effectively they deploy this newly acquired capital. If they can translate this funding into tangible growth, increased revenue, or successful new ventures, then this doubling of their offering will prove to be a smart move. If not, it could just mean more shares outstanding with little to show for it. Investors should keep a close eye on how these funds are used in the coming months and years. What do you think about Hyperion DeFi's decision to double its fundraising efforts? Does it signal strength or potential dilution? Let us know your thoughts in the comments below. If you found this breakdown helpful, please give this video a thumbs up and don't forget to subscribe for more in-depth corporate insights. And for those looking to join the conversation, our Discord community is linked in the description below. Thanks for watching, and we'll see you on the next Decode.